Good weekend. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Friday, and we're now on December 8th, 2023. Next week, we get the Federal Reserve, their FOMC decision. I think we get the European Central Bank and the Bank of England. We got a lot, and then we have CPI on Tuesday. So you have your hands full. But I want to go on record and say something. I keep hearing the word recession, and I have to use it because you hear that. I don't think I want to use it anymore. 199,000 jobs, and I know somewhere between 40 to 48,000 jobs were returning SAG workers, Screen Actor Guild, and UAW, United Auto Workers. Okay, subtract it. You still got 150,000 jobs. No, it's not the 290,000 we were getting after COVID, but the norm is 90. We're still running 50% greater than the norm. Why are we talking recession? I think the most you can talk right now with the data that we keep getting, and the word is keep getting, is that we're going to have a possible slowdown, but not a recession. Explain to me, with my limited knowledge, how you can have a 3.7% unemployment rate in America. I think the lowest we have had is 3.6%. And talk the word recession out at the same time. You can't, all right? You can't have basically full employment in a recession. It's that simple. Will this stop the Fed from keeping rates restrictive? Absolutely not. If anything, this was a signal to Fed Chair Powell. The economy is still strong. You've got to keep your foot on the throttle. You don't necessarily have to go up in rates, but you don't want to send the wrong signal and take a market that is strong and overheat it by dropping rates too much. You may not agree with me, and that is absolutely fine. That's why we live in America, not in another country. But that's how I'm reading it. I too have some college degrees, and I went on, and I've got the best degree of all, the hard knocks degree, having been in this game now 54 years. That's a long time, right? I love what I do. So to make a long story short, there is no recession. There's no recession over the horizon. There might be a slowing down by the Fed staying restrictive. They're already aware of that. And you're going to see in the dot plot, a number of the members will be calling to drop the rates in 2024. Is there a reason to do it in the first quarter? Let me be clear, 100% clear. No. Show me the data. If the Fed is data dependent, show me the data. So that's where you're at on it. And it is the reason the stock market came back. I think other people came to realize what I did during the day. And I just said, whoa, how do we digest this? That was not a number we were hearing. The whisper number going in was as high as 187,000 and 175. 187 was the new Bollinger Band, Bloomberg number. I keep getting Bollinger Bands. Bloomberg number in my head. And 175 was their whisper number. John Farrell was talking about that this morning just before the numbers came out. So I was paying attention there. Other companies and other places were 183,000. We had different things going on, but 200,000, 199, come on. It's a very strong number any way you want to go. In a restrictive Fed, with inflation, I hope, continuing to slip. Guess what? The Fed's got to be scratching its head and going, why would we be lowering it? We're going to be fueling the inflation to go back up. They need to see the slowdown, and they're not getting it out of the jobs. End of discussion. One of you wrote me and said, McDonald's. And I went back and I think I wrote him back and said, no, I covered that in my reports. No, I don't. I've covered other of the companies. I covered different restaurant, Darden just recently, but I haven't done McDonald's. The funny part is McDonald's corporate office, I can walk to from my house, I'll exaggerate 10 minutes. That's an exaggeration in length. They're just down the street from where I live. They're in the hottest area of the city called the West Loop, and they're not in the restaurant area. They're about a street or two over from it. Beautiful offices, and actually my wife has somebody in management there, big management. And interesting company. And if you go into the one in Chicago, by the way, they serve all the food from all over the world. So you can get a burger like the way they make it in Tokyo. You can get one the way they used to make it in Russia. Different ones from all over. It is fascinating. It's very cool. Now, McDonald's, I don't know if you're aware of it because it doesn't get a lot of press. It's opening up a new concept store. They're not telling us just what it is. It's the old golden arches. There'll be the old mannequin they used to have. Many of you won't even remember that. I remember when the sign went up. I'll never forget it on Dempster Street in Chicago, in one of the Chicago suburbs. We got 1 million burgers, then the 10 million burgers. What was it, a quarter a burger? So, I remember all this because of what it changed. And companies always innovative, never bet against McDonald's. Big, bad mistake. Well run, engineered around the world, they get it. So we are coming off a deep correction on a weekly chart, and the market has come alive again. Okay, part of this had to do with the fear that students wouldn't have money to pay after they paid back their loans, things of that nature, right? We all heard that. It's not turned out to be the case to a big degree, but we heard it. And you saw the other restaurant chains respond that way. This market's in an uptrend. When you look at the weekly chart, you've got higher lows on the swing line and higher highs. Bull, and it just began. It began from the correction where you went from roughly 300 back to the 245 range, and now you've come back up. The support in the market is back, as I see it, at the 272.5 zone. The market is classic bullish trend, by the way. Whoa, this is powerful. You've got the shortest term average over the medium term, which is the 100 over the 200. So you've run a correction, past tense. I think the first support down at 272 is going to get bought. I would think traders would throw in the towel and say, I'm missing something if it gets back under 254.5. And barring that, where might it go? Well, the 300 zone is certainly the first target as I see it on the Bollinger Bands. Is the market overbought? Yes. But you would expect that. Here is a market from October that has gone up in price, what? Almost, if we look at it here, that'd be about $40 a share. That's an awful lot on that stock. So we're talking 20% plus that the market's gone up. I'd let it pull back into that range to find its footing. Could it just keep going? Of course it could. But I don't like buying, or I wouldn't tell my clientele to buy a 20% increase. I'd want them to get a pullback. And in addition, you had a series of weeks up and over the upper band. What do I teach you? The odds of going beyond 5 are exceptionally small. When I tell you exceptionally, is it 1 or 2% of the time? That doesn't mean you're not in an uptrend. You then get inevitably corrections. It began 2 weeks ago. You peaked out. You had your outside day to the down. Well, actually, you made a higher high and a lower close, not an outside week. And then you follow through with the lower week here. This market has all the earmarks that in 2 or 3 weeks you could have an embedded reading. We'll wait and see. But certainly in my bull camp, no question about it. And you can see the resistance on KRE. I'm moving on you already that fast, okay? Where are you in the KRE, the regional banks? So as far as IRA is concerned, this is the first challenge of the upper bands. Right here, overbought. This is where I think the pros should be taking some money off the table. Doesn't mean I'm right, but the odds of it just getting over that band and running up here, it can happen. I don't expect it. This generally, the first challenge of a Bollinger Band, stops the rally and then the market pulls back. That is not to say you're going to break the uptrend. That's not what I'm saying at all. I think you've hit your profit-taking number. On MCHI, so these are the Chinese stock. The opposite. If short, this is where I'd be telling you cover your shorts. The Politburo met. I tried my darn best today to read their statement and understand it in English. I couldn't understand a thing they're saying. They are talking through this side of their butt, that side. I don't know what they're saying. All right? We'll see. And I read a bunch of reports on it afterwards. I went to all the normal sources. I went to Chinese newspapers. I don't get what they said, other than I think they want to do something. Now, there's one more meeting this month that comes up, and it is where the finances are really set for whatever they're going to do. So with that in mind, I think other people were confused like I am. You went down again, and you're down for the week, 4.4%. But when you get to lower Bollinger Bands, have you been rewarded if you stay with it? You have not. I'm a percentage player, all right? Or a percentage analyst might be the better words, because I certainly don't put my money in every one of these things. No way. I don't. Who has that kind of money? Higher high, lower low. Here you come to the upper band. Okay. There's room to run here. This is called a vertical price rise. Why? Let's define it so you get an education. Higher highs every single week. It's like this. You pull down a rubber band and let it go. Where did the market stop? The combination of the green line, the 100-day average and Bollinger Band, you had one more week under it. You're in the zone. That's the important thing. Everything's about being in the zone. And that is the key. Hockey. I love hockey. I love to watch how these guys, how fast they can skate. I can't skate. I watch it and I'm in amazement all the time. But the great players are always in the zone. They seem to know where that puck is going before it goes there. Well, you have to do that. So now I'm looking. I can tell you that I think 111.46, that zone will be your peak on this run if it can get up there. I'd like to see the market pull back and do something else. But the industrial sector, this market got a bid. It's another reason that I am dropping, that I am in the camp in any manner that we will have a shallow recession. I want to use the word slowdown. I need to see things get substantially worse to use the classic word recession. I don't see how 3.7% unemployment rate, possibly gets you to a recession. When we look at the energy sector, okay, you've beaten things up. You're down to the 100-week average, the lower Bollinger Band, and you're oversold. I am not bullish, but I'd be yanking money out of some shorts here. Force the market to prove it can go down. And if it lets go, I've told you on my futures, we have some counts into the $63, $64 area a barrel if this market starts coming unglued, and it could. So, yes, I think you yank in some shorts if you are short the market. You're prepared to put them out on rallies. Make the market embed for you. Don't be a hero here when you're oversold into the first challenge of the 100-day average in the Bollinger Band. And I know you'll write me, look what you cost me. First of all, I don't run your money, so I didn't cost you anything. This is what I think, and that's where you're at. UUP. So now you got to go back to the drawing board. For a while there, if we were going to get a recession, I was in the camp that maybe that was it in the dollar and the dollar was going to break. Now I'm scratching my little beard and I'm going, I don't know. Why is the Fed going to be quick in any manner here to change interest rate policy? I don't think they will. The European Central Bank might want to break their rates quicker than us. So the question is, if the European Central Bank moves before we do, which now looks to me like a likelihood, by the way, I want to go into that camp. I would think that basis that, are you buying because they'll revive their economy quicker than us because they're dropping rates already? If that's the reason, then I get the dollar on the coming up here. And then if we get under this week's low, rejoining the bear trend. I think this coming week is super important. Take out this week's low and you'd have lower highs, lower lows, and you open the door up for this region or wherever the Bollinger Band is, and it will jump higher. When we come to GLD, okay, let me come back there just to be certain. Yeah, I liked what I said. GLD, well, we got up to the upper band. I teach you this. The one thing, if you've taken my enhanced Bollinger Band course, you start learning this stuff. And as I told you, when I teach, I take the name off charts. I'm going to teach you, you get up there and I train you. Boom. Boom, you start thinking that way. Because if you don't, what happens is you get caught up in the story. The market's already discounted the story. That's why it went where it went. And you want to keep riding that same piece of news. Bull markets and bear markets have to be fed. And if they don't get what they want, be careful. Well, the reason you're down right here is this market's headwind was lower U.S. interest rates and a weak dollar. Today changed that game. Now, does that mean it can't come back? No, but it changed the game, and that game stays changed, in my opinion, until we at least get into the FOMC meeting on Wednesday and we hear Fed Chair Powell talk, but I will tell you what he's going to say. We are data dependent. The data at this point does not warrant blah, blah, blah. We are staying with a restrictive monetary policy. The inflation story is not beaten. If asked, he's got to say the Fed has achieved one of its goals. We are running at what we call full employment, and then he'll give you the blah blahs, took into account this and that, and blah, whatever. But it's still the inflation restrictive story. If they see the economy starting to do this, then they get nervous and they want to get ahead of the curve. They have done one of the best jobs. I don't know if God was on their side, what was going on, but I've never seen a story like this unfold in the favor of a Fed like I have, and I've been through a lot of them. This is pretty interesting stuff. So I am still friendly to gold. I think gold just got ahead of itself. I think that the gold market's got to be looked at here because I think long term, you're going to get down to that number where inflation is sticky. I told you before, and I'm going to say it again. I don't envision we get to a 2% number. I think that 3% is about where you're going to go. And just the economy's different than it was. You're already seeing labor's different. It's different. And I think at some point the Fed will adjust itself and not say that they don't have a 2% target. They're in the range, they're comfortable, they don't see the inflation pressures really picking up, which is basically saying they don't think you're going to 2% either. They'll say it right now. I don't believe they believe it. In GDX, I get this. You went up to the Bollinger Band, you fall back. Now, the support for the market is 28.82. I'd be very wrong this market if it got back under this low, which I believe is around 26.02 or so. Barring that, I think you're going to find support. And this was the first challenge of a combination of the 100-day average and that number. So the play worked, but you have to know how to take money off the table, which most people don't. Tesla, is this where it can come alive? It is. If Tesla can clear, not this week, but last week's high, you've already got the higher lows, higher highs. At that point, I don't see anything to stop it from making a run wherever the Bollinger Band is. Right now, that's around the 270, 230 level, 39 level. So that's what I'm still seeing there. Uber, I love Uber. I just ordered, yesterday night, I ordered a dinner in, used my Uber. Charge was minimal. You know, if you order a lot, which I don't order in a lot, we really cook at home. My wife was out of town. And I ordered in something that I wanted, and boom, it's on time. You can tip ahead of time now at the restaurants. They've got these things. This is a smart company. They have really improved their apps. I share rides sometimes when I use them. If you live in a big city, you use Uber a lot. It costs more money to go to a restaurant, folks, and give the money to a valet who's probably going to bang your car up than it does to take an Uber back and forth. You can have your good time and you're not worried, and there's all over the place, at least in a big city. DRI, this is the restaurant we had been talking, and like McDonald's, what's the pattern here? You take a look. You came down the same way. They came alive the same way. I've got to think it's the economy. We were prepping for such a hard recession that we never got. We were being prepared in that break that the student loans were coming. That's October. Take a look, that the student loans were going to break people that could buy things. They couldn't go to restaurant chains and so on. And even McDonald's and some of the chains that they own that are lower price chains, and they own a lot of different restaurants, didn't work out that way. So the restaurant groups have come alive. If you tried to get into a restaurant recently, I can tell you in Chicago, you better get a reservation. They are jammed. It's that simple. Google, I like this. I believe in Google. I think that their AI is going to be phenomenal. I think they really have their game. You are now developing sideways action. I'm predicting a breakout to the upside in this market. It would take a government action. You get that, then the game's over, to come in and come after the company in some big way. But barring that, it looks more and more, especially if you can clear 2 weeks ago's high up here, that this market could be ready in that 141 level to make a surprise move. Now, would I tell you to buy the Bollinger Band? I would not. But this market's come alive, and you'd have to take out this week's low, since it's an outside week up, to do any damage to the chart. So you put it together, you try to come up with game plans, and that's exactly what I try to do for you. And the biggest game plan I can give you is the offerings we have. You want to try my Spider ETF? It's right here. You want to come in and you want access to our free access to the research, my twice daily that I write pretty cool. If you like to read and you don't have time, you go, I can't do that. I write my letter so you can read it, the whole thing in under 2 minutes. It's done in headline form with a few paragraphs, and I make points. That way you think about them. You want to read research reports, go to Goldman, go to JP Morgan, go to them. You'll be reading forever, and I don't know what you get. At the end of the day, you're confused. You can get free access to the charting software we have. These are just some of the offerings. How do you get them? You go to IraEpstein.com. Top left, you'll see free offers. You can move your cursor here. That's the way, folks. Can I make it easier? You have a great weekend. I'll catch up with everybody Monday morning. Take care.